Okay, wow, if you're paying attention, and a lot of you are, it looks like it's all happening. De-dollarization, gold and silver to the proverbial moon. I'm going to focus attention only on the attention for a minute. And from what it looks like, that attention might have doubled. So last year's gold buying activity from central banks jumped more than 150%. That's year over year. It's obviously more than double. Q4 total buying, that was the highest on record. And that's just what we know about. There are rumors that China and others have underreported their gold purchases. At the same time, investment demand for gold went up 10%. That's according to CNBC. And global jewelry consumption, that dropped by 3% in 2022. Now, those are global figures, and it makes sense here because the higher price of gold, the harder economy, that would make it more difficult for retail buyers. That was last year. Now, if we shift focus to the price of gold, well, 2023 started out even stronger. It also started out with heavy interest rate hikes and a strong dollar. Now, those are things that would normally be bad for gold demand and for price. And for a hot minute, it looked like we were going to see a pullback in price, but then the Silicon Valley Bank collapse happened, and then gold just really took off. Now, this is not something that we have comprehensive data on, at least not something that I have comprehensive data on, but anecdotally, we've seen several institutions report consumer investment demand doubling month over month. That'd be like bullion depositories reporting new accounts. And that shouldn't be a surprise. We saw similar reports last year at this time after Russia's invasion of Ukraine. But this means it's more than just the central banks getting in on the gold ownership. Now, on the retail side, local coin shops have told me the same. I've heard several say that their store activity has gone wild, both from people buying and from people selling. One even said he's seeing twice the activity that he sees in a normal month. Not that there are many normal months lately. And then one final stat. If you were to talk to anyone with the Precious Metals channel on YouTube, you'd hear that views are up considerably as well. More people are tuning into what's going on, and more people are tuning in for the first time. Now, I'm sure you noticed the way I ordered my stats there. I started with comprehensive global data and audited reports, and then I ended with some YouTube bros talking about their stats. But it's clear that interest in gold is extremely high right now. And what that means to you as a buyer is that it's more expensive to buy right now. Spot price is pushing $2,000 and premiums are creeping back up as well because the dealers are having to work through a high demand on their inventory. That means it's a seller's market and they get to pick their prices. And we're still in the wake of the bank issues, but like I mentioned earlier, normally we'd be expecting falling gold prices. We've seen aggressive rate hikes, we've seen a strong dollar. Those two things would normally send gold prices the other way. And that happens for two reasons. It happens because there are competing safe haven assets, because the benchmark return is so high, and also happens because it's more expensive for non-US buyers. And the reason for that one is that gold is dollar denominated. So if your currency is weak against the dollar at the moment, well, gold costs more in your currency. And since most currencies are like that right now, the global demand is affected by higher relative price. This idea that the dollar is strong seems like a huge contradiction to the current non-mainstream media stories, maybe the mainstream media stories too. The death of the dollar and the rise of the CBDC, that has all the attention right now. Now, the de-dollarization topic, that is not new. It's been around for decades, but the supporting stories are making everything feel imminent. The end is near. I saw someone actually say that April 1st was the beginning of the end. Well, welcome to the end, I guess. Don't forget your party hats. Now, if we do see a decline of the dollar, the two forces pushing the price of gold down would flip. It would become cheaper for anyone outside the US to buy gold. And that's because the reverse is true here as well. As other currencies become stronger against the dollar, that increases global demand because prices begin to go down in those currencies, even though the foundational price will now go up. And then once we see a pivot on interest rates, well, we'll see the allure of those competing safe haven assets go down as well. So all of this is bullish for gold. Now, one thing that I would say about giving a bullish prediction here is that increased trading activity does not only mean that gold demand goes up. There's been A lot of selling activity going on as well. And there's no reason to think that sellers won't continue to take profits as those gold prices increase. My point there is just that there are always cooling forces in play. Now, the other thing to consider here is that all these stories of the end being near, they are taking advantage of the increased attention that I mentioned earlier. All the YouTube bros are aware that more people are watching right now. So any story on CBDCs or any story about you not believing what silver did today, well, they're going to get big views. And any hype is going to result in instant gratification. So be careful there. Thinking that the end of the dollar is here and you need to get your cash into gold and silver stat, that's a wild idea. Just remind yourself that before you decide how to react. Moderation and practical planning, they're still as important as ever. Now, as I'm recording this, spot price for gold just hit 2020. It was 1984 when I started, and both of those numbers somehow feel kind of Orwellian, but maybe I'm just seeing patterns where they don't exist. Regardless, $2,000 is a big psychological number. It's a hurdle. If the price of gold holds above that, it has a lot more room to run. Now, I'm not saying that it's on a trip to the moon. I don't think that, but higher prices, plus the increase in buying from central banks, from investors, and from retail consumers, all at a time when Fed policy would normally be pushing gold prices down, well, that's something to pay attention to. Now, ideally, we'll see some of that profit taking playing out as well. Maybe we'll get a price dip to get back in on. That's hard to say. If $2,000 doesn't hold, maybe we see 1950 again. That's really starting to look like the new 1850 to me. I might have to change my buying threshold. As for the rest of the year, who knows? De-dollarization, CBDCs, and bears. Oh my. Well, I think that's going to be a little bit more like watching paint dry. We're all aware that paint does dry. It's just not very exciting. I don't think it's quite the party that some are saying it is. I'm definitely not going to be paying to get into anybody's sideshow to watch it. But let us know what you think. Is gold going to hold above $2,000 this year? And is the end near? I'm just kidding on that last one. You don't have to answer that part, but let us know where you think gold price is going. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.